Hello and welcome to another Trades and Tutorials video. In this video I'm going to take a look at whether or not it might be time to start nibbling on getting long China. So before I get into the analysis of the video, let me just make sure if you're just finding us on YouTube, please make sure to subscribe to our channel. And if you have not already checked out marketgauge.com/tutorials, you can find a lot of other interesting videos there as well. And finally, you should also know that you can see this video in HD. There's a little setting on the lower right hand corner of your screen if you're not already seeing it, and it will be much clearer in HD. All right, so the reason to look at China is really twofold. One is to see if there's any opportunities there from the long side in ETFs, and two, even if you don't want to trade China, it has been the swing factor really in what's driving the markets lately. Everybody's focused on China and China's collapsing stock market. So let's just take a quick look at what's going on to see if there's any evidence of it turning. Now, of course, I probably wouldn't be doing this video if I didn't think that there was some evidence. And I'm going to look at a simple pattern. I've looked at this with some of our sector ETFs. I've covered this over the weekend, actually, recent weekend, with some of the sectors. And so China's a natural next step to look at. So we're going to look at FXI right now, which is probably the largest ETF covering the Chinese stock market. And the moving averages that you see on the chart, the gray one is the 200-day, the magenta is the 50-day, and the green one is the 10-day. And we're going to focus on the 10-day because clearly this thing is in a major downtrend. Any discussion of buying China at this point is without a doubt trying to pick a bottom. And when you're doing that, there's a simple technique that I use with the 10-day moving average, which is to look for scenarios where the 10-day moving average, and one of the things I want to point out is ever since kind of this point up here, the market has really never gotten going above its 10-day moving average. And it still has not, but that's what I want you to keep an eye out for. So what do I mean by gotten going? Well, here, what you look for is that the moving average is down, it slopes up, the price spends some time above it, and then it breaks above that price. So we got it there, turned out to be a huge head fake, and ever since then we've had this day get above the 10-day. 10-day never moved higher, it continued lower. We got a few days of closes above the 10-day, but it never broke out above that level. And here we got a day of a strong close above it. Moving average never really turned up, but regardless, it never broke above it. And you can see failed attempt to even get above it there. And so today, we're back above it. So this video is definitely on the early side for FXI. But the other reason that this is interesting is because here is the collapse day. And China came way back into this collapse, much farther than the US has come back, at least on the FXI. And I want to focus on that day, the rally that came after that, where we are today. So, is it time right now? No. What we want to look for is a couple of closes, some consolidation over the 10-day moving average, and then a break above it. So, the thing with China is that there are a number of different ETFs, and there's one in particular that actually looks a lot more interesting. So I'm going to focus first on the EWH, which is the Hong Kong index, and just point out that if we look at those same points that I was just looking at, here's the crash day. It did not come back down in as much. It's now well above the 10-day, so it is quite possible that we could see a couple nice days of consolidation, then look to break out. The other thing that's notable about this particular ETF is that the rally after the crash day is kind of right up where we are. So if we were to get a situation where we had some good consolidation over the 10 and then a break over that rally, you got a swing high, kind of a test of the collapse, not a total test of the lows, and then a move higher. That's a really good pattern to look for. Now, again, you may not want to be a buyer because you don't want to try to pick a bottom, but if we see that pattern happening in these Chinese ETFs, then it could indicate that China is at least more stable and could trend higher, which would be at least positive for the U.S. markets from the standpoint of everything has been negative coming out of China. And so the last one I want to point your attention to is CAF, so the China A shares. And this one has the most interesting pattern. In fact, if you look at the collapse day, it is now, the high of the collapse day is basically where this market has been consolidating. And remember the rally up and then the pull back? Today, it actually pierced that level. So if there was one I would focus on as a potential area to dabble in picking a bottom, it would probably be this one. So we'll look for another day or two of just closing over the 10-day moving average, and then we'd look for a break over these price levels with a stop under here, with a target from my perspective really back up to the 200-day. This is the 50, so that could become problematic. Maybe you sell a little at the 50, but you'd want to let it run up, then put in a no loss stop and look for take some profits here. This could have been a very significant low in the Chinese market based on just how dramatically it went down. Of course, I'm basing that entirely on the momentum and the price action. It has nothing to do with any fundamental analysis of the country's economic conditions. But the markets will always lead the fundamentals. And the markets do look like, in some respects, they could have flushed out, put in at least an intermediate term bottom. And if you're a buyer at 26 with a stop under 24, that's $2 worth of risk. If you've got your first target at 32, that's 3 times what you're risking. So from a trading perspective, there's a good risk reward there. And like I said, whether you're going to trade it or you're going to use it as an analysis to figure out whether or not perhaps China is no longer going to be the negative surprise that it continues to be or has been recently, I think this is helpful. Hope it was helpful, and I'll see you in the next video.